2016. Let's just take a quick look at some of the major indices tonight and just bring everybody back up to speed that either missed it or had trouble catching it or didn't read the research. On Monday, June 27th, I sent out a research piece that said I was looking for, once the S&Ps went above 1995 bid that night, that they were going to at least start a short covering rally, which just kept on going. Once we got above 2039, which is the yearly pivot, it gapped up above it, never got back down to it during the day session. Basically opened on its lows during the pit session. This is what you call an opening range trade, when it opens at 8:20 in the morning Chicago time, starts up, and the capital flow goes one way all the way. You do not fade flows. These bars are opening ranges. When you see a market start one way out of an opening range, don't fade it. This day was Monday. It opened up on its highs of the day and went straight down, forced everybody out and closed on their lows on a major oversold condition. I wrote that I thought that this was a capitulation low, and back above 1994 would prove that to be the case. Here you have an outside reversal higher day midweek on a Wednesday. That's a very bullish pattern with a Wednesday low, with a model that had been down trying to turn up with a Wednesday low, and we've gone straight up. Gap, third gap. Now this is just the U.S. session. Now everybody's asking me what to do now, and my point is there's nothing to do now. Either you're long some of these names and you see where they're going, or you're not. I thought that you'd see a little bit of a pullback here midweek. Even if we saw something in a 21-23 where the breakout was from, that would probably be a low risk buying opportunity. And I'd take a look at it there. But I can't chase it until the NASD breaks out now. And the NASD hasn't quite broken out higher on the year. And once it does, it's going to force everybody to go with it. Now, the last signal we got in NASDAQ was that same day, Wednesday, July 6th, before unemployment, when we came right back up through the 200-day moving average, and the yearly pivot is 4402. And we've had some pretty good swings back and forth from 4402. If you look at it, we've had several really big swings this year from up to down off that number set. And it's been pivotal all year. You just don't want to fade it when it starts, when direction starts one way through the level. And it's been coming back up to it and taking off again. I don't think we get back this low again. I don't think we get anywhere close to that again. Here's a monthly chart in the NASDAQ. It looks good. And as long as we basically stay over these highs at 45.28, I don't think you're going to see much downside. This is all the orders in the market are up here. They're called buy stops. And this from 45.92 all the way up above 46.06, 46.07. That's where all the resting buy orders are in the NASDAQ. That will force everybody in. I'm not crazy about buying any strength. I want to wait for a pullback, and if I don't get it, then I'm just going to watch this next part of it and be happy with what's already happened. Now let's just take a look at some of the names that I've been highlighting. One's been Amazon. For the last few weeks, it's gone straight up. I pointed out Goldman last week when Draghi spoke. This was big. When Goldman got bailed out of all their Italian debt and Europe, the European peripheral debt, this put a big bid under Goldman. And now, it's broken out. And again, this is something that you want to buy on a break again because it's, this is in an uptrend right now. I've talked about healthcare, biotech, specific names. They've all rallied. And you can see that the IBB has just been hugging this cloud support after breaking out. And this acts really well. Broke out above the 50-day moving average, and it held the break back down to the 50 on the 7th, and it's just been, grinding higher. And you can see this 273.45, which is the gap that we broke down from. Once we start closing over that, then you can get another leg up towards its 200-day moving average. So what I want to do is be patient and wait for the market to tell me what to do. The gold had a pretty good blow off here. It looked like it wanted to go a lot higher. This 1380 level was something that I put out last week as I needed price action above 1380 and a close over 1380 to get another $40 or $50 higher, and that hasn't happened. This has come off with a risk on board. So is the yen. Here's a picture of the yen. I had a matrix level at $99 yen. And it tried to get back towards that level. Now it's going back through the other levels, through 103, and it's going to try to get to 106, 106 and a half again eventually. But in the meantime, you can't sell the yen on weakness or buy dollar yen on strength in here. It's just not a good thing to do. You have to let everything digest. Here's everybody's favorite day trade, Nugget. This is a triple gold miner bull. You can see it's got basically a double top on a weekly, potential daily double top. Let me see if I can pull this up so you can see it a little bit better. And it would have to get all the major sell stops are below 142.03. So this is where you want to look for everybody to get run out of this trade. And if it does, then maybe we can correct a little bit. But this is also, daily momentum support right in here too. So we have to see how far down this can actually go. So this is something to keep an eye on. This has been a pretty good pressure relief break in Nugget. So I'm not saying that this is the top in the gold, but this is a trade, whether the board's risk on or risk off. You just have to mind some of the correlations that have been working. I started talking about the XLK earlier in the week. This had a terrific pattern last Wednesday. It held, and this is led all the way up. So you just don't have to trade the indices. I'm giving you all these alternatives that are tradable, that are investable, that are low volatility, that you can be in. And that's all for tonight. Thanks for listening. Good luck and good trading.